Lockheed Martin reported their Q3 earnings this past week. Earnings per share came in at $6.77 versus Wall Street estimates of $6.66. Revenue also came in at $16.88 billion versus Wall Street estimates of $16.66 billion. Before we start the analysis, let's look at this quick video that gets into the details of the earnings results.
We're watching the defense sector. Obviously, this sector has been moving higher since we had upheaval happening, conflict happening in Israel, and so with that, we're watching this group closely. Now, Lockheed Martin came out with its quarterly report and, beat expectations, reaffirmed the outlook, and the stock is higher. Joining me to talk about this group, we'll start with Lockheed Martin, but there's many names in this group. Ed Butowsky is with us, managing partner, Chapwood Investments. Lee Bohl, senior manager, trader education at Charles Schwab. Thank you both for being with us. So, Ed, you're not necessarily a fan of Lockheed Martin. The defense stocks, for the most part, have been on somewhat of an upswing since the Saturday, the beginning of all of this turmoil. Tell us what you think about Lockheed Martin.
Well, it's interesting because Lockheed Martin, did very well when Russia invaded Ukraine, and there was a spurt up, and then it came back down, and then it happened again recently. But I just don't like the company or the industry itself, because we have a lot of money that is going to start to dry up from the U.S. government. 70% of the income to Lockheed comes from the U.S. government. And the U.S. government, last time you looked, they're $33 trillion in debt, and they're going to start cutting back on budgets. So I'm not a big fan, even though they're one of the better players in the defense contracting business. I'm just not a huge fan of the sector itself. If I was forced to buy something in the sector, Lockheed is selling at one of the lower valuations at this point.
Right, understood. I mean, when you check names like Lockheed Martin up 10% this month, Raytheon's up 4% this month, and General Dynamics is up 10%. Your thoughts, Lee Bohl? We did see the details from Lockheed Martin in particular. What stood out to you?
Well, I think what stood out to me was their margins got cut a little bit. And one of the reasons is 62% of their contracts are fixed price. So they can't pass on the costs, and inflation is picking up. So that does decrease their margins a little bit. So that was the first thing I picked up. The other thing was just what Ed said, that, we had a nice spurt up, but we fell back and reversed the entire move on the Ukraine-Russian situation. And I think it's unrealistic to think that we're going to have an immediate spike in some of these, just because defense contracting is such a long process that any increases in budgets are going to take a while to filter down. So I think that it's good that they beat a little bit of margin pressure, though, but they're still a major player.
Right, understood. And so with this, at first we saw these names moving higher. And as I said, look, month to date, they're winners. But the takeaway here is a lot of this is ground warfare. There were articles that the Israel-Hamas war not seen boosting the defense companies. Ed, to your point, I mean, ideally, don't we think that the U.S. is going to be moving money into our military and our safety? But you think that Lockheed is the best position of the group, but just you wouldn't touch any of them? Really?
No, I would not touch any of them. Anytime you have the source of your funding getting weaker and weaker, it'd be like owning a high-end restaurant in New York and then finding out that most of the wealthy people were having less money. They're going to stop going to that high-end restaurant. And that's what's happening with U.S. government. There's just not, that impulse and that much more money. And also, don't forget, about 70%, if I'm not mistaken, of Lockheed's business is airplanes. These take a long time to build. I mean, there's a long leeway that you have to really look into. So this is not something that's going to just turn around on a dime, and all of a sudden you have this money and they're going to start to get these big budgets, and you're going to start seeing a lot of airplanes being developed. I mean, they take 3 to 5 years to build, if I'm not mistaken.
So we talked about a lot of the negatives. I mean, even though the company did reaffirm guidance, Lee, you mentioned earlier, with inflation, that they're not able to pass on some of the costs to those contracts because those contracts are set, right? 60% of them are set. But you do have some potential positives. So let's give folks something to sort of chew on here on the positive side.
Yeah, sure. So the book-to-bill ratio is still very strong. So they have, decent backlog going forward. So that's it. Also, Ed's, is saying that the defense spending might be cut. That's probably true, but in the short term, the forecasts are for a 5 to 6% growth in the defense budget for 23 to 25. The 10-year trailing average of defense gains is only 1%. So there is that, at least in the short term of the next couple of years. The other thing is they've been very generous, if you will, with providing cash to shareholders. They bought back $1.8 billion worth of stock. They raised their dividend, granted, but by not as much as they had previously. But they have potential authorizations for over $13 billion going through. So there is that as a positive as well.
This is the monthly chart, and we can see that we have this huge resistance support band at the $400 level. It also happens to be a round hole psychological number. I have a target at the $460 level. We're roughly about $16 away from that price target. Going to the weekly chart, you can see headwinds above. In particular, you have the moving averages pointing down. This is the 13 and the 26 simple weekly moving average. However, despite the headwinds, you have momentum to the upside after price went down to that resistance support band, gapped higher, and the momentum up continues. Although this past week was an indecision candle, an indecision week, meaning price started the week off lower, towards the end of the week went higher, but then pulled back as investors were taking some profits off the table. So not only do you have the headwinds of the weekly moving averages, you have the 200-day moving average also serving as a headwind, dynamic resistance. So it's going to get in the way before price can continue to move higher. Again, look for a target at the $460 level. Thanks for watching. Subscribe. Please like the video.